The base metal complex has been under a lot of pressure in the short term, as negative macroeconomic sentiment has impacted the base metals. China and US are currently in a trade war, and the impacts of this trade war has been seen in both of their PMI numbers. We have seen a decline in the PMI numbers of both these economies, which is impacting base metals in the short term. But we are quite optimistic going forward that the ongoing trade talks between China and US will turn out to be in a positive, will work out in a positive deal for both these economies, and will be a positive for the base metal complex as well. In copper, we have seen that prices have slipped to below 400 in the last few weeks, and from 400 again the market has bounced back to around 417, which is trading currently. The main reason is that the RRR cut that was given by China has given a good boost to the economy. The overall $1.5 trillion infusion after a 100 basis points cut of RRR is seen as a very positive in the market, as the base metals have all positively reacted to this news. So going forward in the short term, this RRR cut will keep the markets quite liquid, and the base metal complex will continue to remain on the positive side. So we see copper prices moving around from these current levels to around 425 to 426 in the short term, but we still need to look out at the data which will come out in the next few weeks, which will impact the prices. Going forward to aluminium, in the aluminium market also we have seen that the prices have slumped quite a bit in the last few weeks. Mainly the sentiment has turned negative for aluminium, as Rusal, which is currently under the US sanctions, there's a bright chance that the sanctions will be lifted on Rusal, as the main shareholder of the company, Deripaska, has given up his controlling stake in the company. So this is a positive news for the metals complex, but prices have been negative, as the market is reading this as that more supply would come into the market. But if you see the inventories on both LME and Shanghai, inventories are quite on the lower side, which will support the prices going forward. So we feel that aluminium market will also be positive from here, as lower inventories, and also the prices are currently trading at a level which is not positive for manufacturers. Below $2,000 is the cost of manufacturing for aluminium, and below 2,000 currently the prices are trading around 1,800 on LME. So this is going to negatively impact the manufacturers, and we may see some capacity closures due to this. So going forward on MCX, we expect the prices to move up from this level of around 130 and move to around 135 to 136 in the short term. Also, the winter curbs in China, which are late this year, we expect more capacity will be shut down in China as well going forward.